Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Good morning and welcome to Monday here at ausbiz. I'm Andrew Gagan. Good to have your company. And let's check where we finished on Friday. A gauge of global stocks rising while Treasury yields dipped after data showed jobs growth in the US slowed last month, boosting expectations of a cut in interest rates. Stocks on Wall Street closed higher, with the Nasdaq and S&P 500 again hitting record highs. For the week, the S&P rose around 2%, the Nasdaq 3.5%, and Dow was up around 0.2%. Friday's rally was fueled by mega cap stocks such as Microsoft, which rose to a record high, along with Meta, which jumped around 6%. The major banks fell ahead of second quarter corporate earnings reports, which begin on Friday. Bank of America, Wells Fargo, JP Morgan Chase, they all fell, pushing the S&P 500 banks index more than 1.5% lower. And department store chain Macy's surged on a report that said Ark House Management and Brigade Capital raised their bid to buy the company for about $6.9 billion. Well, US employment increased in June, with the non-farm payrolls rising by 206,000 jobs last month, although government and healthcare services hiring made up most of the payroll gains, and the unemployment rate hit a 2.5-year high of 4.1%. Annual wages increased at the slowest pace in 3 years, with average hourly earnings falling from 4.1% year on year to 3.9%. And the US 10-year Treasury yield fell to 4.27%, to be down around 20 basis points for the week. The 2-year fell to 4.6%, the lowest level since March. Now, futures market are pricing in a 72% chance of a 25 basis point rate cut at the Fed's meeting in September. Elsewhere, the second round of parliamentary elections in France has surprised, with a leftist alliance unexpectedly taking the top spot ahead of the far right, while President Macron's centrist alliance has come in second, leaving a hung parliament. Meanwhile, UK government bond prices and the pound are higher, along with stocks after the opposition Labour Party surged into power late last week. And the US dollar has fallen on that payrolls data, with the Aussie trading at 67.5 US cents. All right, well, let's get across what is moving global markets at the moment, also with a focus on New Zealand. Greg Smith joining us from Devon Funds Management. Greg, happy Monday morning to you. As we look back, well, in fact, let's first start where we're at right now. Where have you opened there locally?
So NZ50, we're currently down 0.6%, so 11,723. Pretty quiet on the news front of late, but we have got that RBNZ meeting this week, which we'll come to. One of the interesting movers today, obviously the electricity sector had some good news with Tiwai staying, New Zealand Aluminium Smelters. Their shares are actually, Contact Energy are actually lower by over 4% this morning, so they've upgraded full year earnings guidance to 770 million. That compares to 620 million. This is for FY25, 620 expecting FY24. So they've had some progress on their geothermal projects and also the longer contracts, of which Tiwai is part of it. They have uplifted the dividend by 4 cents, going forward to 35 cents per share. But yeah, perhaps the markets were looking for a little bit more on both counts. But yeah, the sector has had some good news of late.
All right, so Greg, you do mention that key meeting by the RBNZ this week. Let's get a preview then of what the expectations are and what are they considering, just as far as how inflation is travelling in New Zealand at the moment.
Yeah, so I think inflation's sort of travelling in the right direction, as we've talked about before in the program. The New Zealand Central Bank has been one of the more sort of hawkish around. Does seem to be that they're sort of staying to that line. So that's sort of, last we sort of heard still talking about the first rate cut not coming until next year. Markets have started to bring forward their assessment of where that rate cut will come, and I've talked before about how we thought it would be later this year. You've seen a number of the economists from bigger banks bringing forward their timeline from, say, February next year to even as soon as November this year. So I think that's probably where we will sit. I'm not expecting a great deal of a change. Well, there won't be any change on Wednesday, and we don't get a full statement, so there won't be a lot of hints about where they're going, and I don't think there'll be much change in the language. So yeah, it's probably going to have to wait till sort of later in the year for that. But certainly you look at the confidence reads, consumer confidence is at a low ebb, business confidence is at a low ebb. We just had a report late last week that showed that if you look at the non-financial business sector, they saved a negative $2.5 billion in the March 2024 quarter. So businesses are seeing lower profitability, they're reducing inventories, they're reducing spend. That's going to ultimately tick up in the unemployment rate. So you have to think, and business obviously also like individuals are suffering from higher borrowing costs. So inflation's coming down. The rest of the world, I suppose, a lot of the central banks are already moving. Will the RBNZ be one of the last to move? I don't think so. I think their hand will be forced later in the year.
All right, one of the last? Yeah, maybe not. I think your cousins across the ditch may be the last to move. Talking right about the RBA, of course. Greg, let's turn to the States. Of course, we did have those key non-farm payroll numbers out on Friday. Sort of some evidence there of some softness emerging in the labour market. That comes ahead of the key read on inflation in the States this week. Plus, we also get testimony from Jerome Powell as well.
Yeah, I thought what was really interesting there was that, although it was a healthy level of job creation for the month, often the revisions sort of get put to one side, but we had downward revisions of more than 100,000 for May and April's numbers. So you put that on a chart, or just go to their the Department of Labour's website, and you'll see the chart of non-farm payrolls, or of course on your station here. You'll see the wage. The employment market is certainly moderating. Wage growth also moderating as well. Around about sort of 3.9% annually in terms of wage growth. So that's around about the level of inflation. And of course, driving those jobs numbers as well was the government. So there's around about 70,000 there, and healthcare. So they're obviously pretty defensive sectors. A lot of other sectors you saw declines. So that unemployment rate ticking up to 4.1%. That was tied with the highest level since October 2021. So I think the labour market's loosening up a bit. We've got inflation heading back. We still do very much have a data-dependent Fed. But I think they'll be paying attention to that. So it'll be interesting to see hear what Jerome Powell has to say. Obviously, we get that inflation number, later number in the week. But we're now looking at almost an 80% probability in terms of market implied for a first rate cut coming in September. So the odds are we're looking at sort of 2 this year.
What equity-wise in the States, what's in focus at the moment? I guess particularly from a Kiwi investor point of view.
Yeah, that's true. So if you look at the retail investors here, Tesla is actually has been one of the favourite stocks. Of course, Nvidia's sort of taken over that a little bit. Nvidia's obviously powered the S&P 500 this year. It's around about a third of the gain so far. Obviously another record high, 34th record close this year for the S&P 500. It's all been about AI. So it'll be interesting. A lot of sort of investors, retail investors, have backed AI and Nvidia and so on. But Tesla's also been very well followed. But it has been a bit of the ugly duckling of the Magnificent Seven. Obviously had a great week last week, up around about 27% for the week. So almost erasing sort of those year-to-date losses. So we had that strong deliveries number. It'll be interesting to see. Obviously, we've got the earnings season getting underway with the banks this week, but we've got Tesla later in this month. And we know that they've had issues with demand. They've had to cut prices. They've had to offer interest-free loans. But it seems like that's coming through in the volume. So it'll be interesting to see how that plays out from earnings point of view. And meanwhile, you've got Elon, with Tesla having a market cap of just under 800 billion, saying that the company will be worth in the trillions of dollars if they get autonomy sorted, and also their Optimus robot. So that's going to be really interesting. And also Harry had a bit of a pop at the short sellers on Friday, including Bill Gates, and obviously the short sellers took a bit of a bath last week. So that's been an interesting one here. Is Tesla going to start continuing to sort of rebound and make up all that lost ground, and is Nvidia's star going to wane? Time will tell.
And Greg, investors also very focused on election outcomes at the moment. It's inescapable. We had the UK election, which did come in as expected, with the opposition Labour Party taking power there. Of course, the French elections, a bit of a surprise, a lurch to the left, where we thought perhaps it was going to the right. That was like given the first round. And of course, also ongoing focus about the US election and whether Joe Biden is going to hang in there.
Yeah, I think it's just it's an added factor, isn't it? And it's the old cliche about markets that are not liking uncertainty. And yeah, as you mentioned, the UK election, that was pretty well telegraphed. Excuse the pun, but the Conservatives going out after 14 years. The writing was on the wall, so there wasn't a huge surprise. A little bit different situation in France, and obviously that move to the left over the weekend. I think it looks like we're going to have a hung parliament potentially. So that's probably not ideal for French markets. And then the big story, of course, this year is Biden v Trump, that sort of rematch. And obviously that debate didn't go particularly well for Biden. And I think by all accounts his TV interview over the weekend didn't exactly calm nerves. So I think there might be a little bit of nervousness as we head closer to that election in the States. Will Biden stay or will he step down? And I think there's real concerns, I suppose, mainly from a market point of view. Love him or hate him in terms of Trump, whether he's seen as potentially being inflationary, and also whether he ramps up sort of the trade war sort of side of things. So I think perhaps being put aside for one moment in terms of that election, but I think it'll become increasingly onto the radar as we get towards November.
Greg, thanks very much. Enjoy your week. Thanks for joining us in Devon Funds Management.
Thanks, Andrew. Bye for now.
Let's take a look at where we're likely to get going locally. SPI futures are down, as you can see, just over 0.1% there. Also, there will be focus on the iron ore majors, given the iron ore price, the futures price coming off about 3%. Stay with us because the open is just a couple of minutes away.